Yeah!
Yeah.
Welcome, everybody. It's Wednesday. The markets are plummeting.
Oh, come on.
The world is going to shit.
It's a boring day. Nothing going on.
Nothing going on today. No, just another day of the world falling apart. Crumbling, coming to pieces in the palm of our hand.
I wonder if the Fed's thinking maybe they should be raising rates here. No, they...
The Fed raising rates.
Yeah.
Oh boy, that would imply that they actually had the interests of the public in the world at heart and weren't actually just the lackeys of the presidential and elite financial forces.
The elite.
The elite. The elite.
How many
Everybody's wondering what the elite is. That is the top layer of the financial food chain, which would constitute not the top 1%, not the top 0.1%, but the top 0.01%, which still puts us at what, like 2,000 people?
Well, I think...
Let's do that math. We'll
Okay,
do that math later. Somebody in the control room, do that math. If there's, let's say there's how many...
So 1% of 7 billion would be 70 million.
70 million.
Okay, so 0.01% of 70 million
0.1% of 70
is 700,000 people.
700,000. Okay, so 0.001.
7,000 people.
So, okay, now I think we're in the realm of the...
There's probably 100,000 people that are in that category.
Well, let's think about it this way. How many capital pools in the world do you think are held in private hands, essentially, like call it family trusts? I think family trusts are the most potent family or potent capital pools in the planet. How many would you say are above $1 trillion in value?
I wouldn't say. I'd say, I don't know.
I'd say at least 5.
No, I don't think so.
No?
That's a big number. Okay. No, because Bill...
Descendants of the Medicis.
Look at...
Descendants of the Rothschilds. The descendants of the... No? You don't like one?
I don't know. Look at Bill Gates, and there's 6 of them that have the same wealth as the bottom half of the world's population. And you know who they are.
No. That's all bullshit. That's bullshit.
Oh, you're talking about...
The real money is not to be seen on any top richest man in the world list. The real money is not in sight anywhere. Anyways, let's talk about that a little later. Today we've got a really sort of action-packed and very emotional show because we've got Fraser Toms, obviously, with the news. And then at 3:15-ish, we're going to talk to Dr. Marc Faber of the Gloom, Boom, and Doom Report. Dr. Faber has been an erudite commentator on markets and the forces that move them for probably 40 years, probably 50 years. Anyways, I remember he's one of the first guys I ever listened to, and I thought, that guy's crazy. He makes it sound like the governments aren't to be trusted, and the money supply is a complete lark. I thought when I was younger. Anyways, then Dan McDermott from the Chart Guys is going to be here. He's going to give us his 2 cents worth on all of the shenanigans going on in the marketplace. And then a little later in the show, Torsten Kunzlin is going to be here. He is the CEO of Sundial Growers. We're going to talk about his company's debut on the NASDAQ and his most recently reported earnings. Now, let's get right down to it, Edward. Yesterday's sudden turnaround in the S&P 500 and sudden explosion in stock prices to the upside a la 5% plus or more, supposedly based on Trump's flip-flop on tariffs causing wild gyrations in the gold price as well. S&P 500 flashing recession no matter which way you look at it, despite the fake rally yesterday. And so the monetary crisis is actually what's causing panic among central bankers. Rates going negative create a new hierarchy of safe haven currencies. Now let's try to wrap our heads. We're going to do this every day until we figure this out. Let's try to wrap our heads around the idea of negative interest rates. So this means if I borrow $98,000 to pay for a house, then when the mortgage is due in 10 years, I'll have only paid $96,000 and the bank will be cool with that. When I go to the bank machine and I ask for $100, the bank machine is going to give me $102. No, I didn't ask for it. I just asked for $100, but the bank's going to say, no, you got to take $102. I mean, if fair is fair.
I think right now the negative interest rate situation applies more to when you have money and you go to try and get a return. They're saying, we don't want your money.
Right.
Like, as far as borrowing money, here, look at this, see?
Yeah, look at nice hairdo.
Yeah.
That's where'd you get that?
Yeah.
Do you get that in Hong Kong at the airport?
Yeah,
No,
I just
not
wrap
likely.
this around my ear.
You ever been shopping at the airport in Hong Kong? That's where you
I've
get
never
all
been to
kinds
Hong Kong.
Really? I like your fashion sense. Oh, the audience can't see it because it's on the other side of your head.
Yeah.
There we go.
What's that sticking out of my ear?
What are you trying to bring in a signal from Mars or something?
What's going on here? What the? Jesus. Okay, I got
Boy,
it.
Edwards.
So
Latest fashion sense in broadcaster Vogue chic.
you know what? We've got some problems here in the world.
Speak for yourself, Edward. I've got tons of gold buried in the ground. I've got chickens, pigs, cows. I've got cotton grown by the bale.
Food becomes a bigger issue.
Yeah, and I've got weapons. If anybody out there is thinking of coming and taking it from me, let's just say I have a fully trained cadre of junior assassins with the latest in weaponry pointed at the perimeter.
Right.
We will take your money. Anyways,
Yeah, okay.
today in politics, interesting in Canadian politics, apologize to all you Americans. It's probably not of interest to you. You probably don't even know where Canada is. Ha, just kidding. But Prime Minister Justin Trudeau was found to be in violation of Conflict of Interest Act for trying to influence Justice Minister Jody Wilson-Raybould to overrule a decision to not grant a deferred prosecution agreement to Quebec-based engineering firm SNC Lavalin. Ethics Commissioner Mario Dion has found, finally, a Canadian with a pair of balls that actually have something flowing in them besides air. Congratulations to Mario Dion for upholding the truth. And here's the fucked up thing, though, Edward. Here's the fucked up thing. I look at this and say, well, Justin Trudeau is going to be a blatant server of private financial interests, private corporate interests, and he's going to subjugate the rule of law for all Canadians to that interest. You'd think that you wouldn't want to vote for him. But just then, as the realm of negative interest rates, nothing seems to make sense. The best candidate for Prime Minister in Canada is still Justin Trudeau. How fucked up is that? Like Andrew Scheer
can't be the best candidate.
Okay. Tell me one of Andrew Scheer's election planks, one of his policies. Tell me his stance on anything. Yeah, you can't. And you're a conservative, if I'm not mistaken. So there you go.
I'm not that conservative.
Well, I know that. But you're more conservative by nature than you would be considered.
Politically, I'm a little bit more, I'd like to think that we should all take care of ourselves. And I think that's where I'm more conservative.
Libertarian.
Well, I don't think that, the really...
Anarchist.
Nobody really wants to take care of you. They pretend they want to take care of you so that they can take money out of your pocket. That's the way they take care of you.
Ain't that the way? Anyways, we better have some news now so we can get that out of the way. Here is news nurse Fraser Toms.
Hey everyone, here's your news for today. HEXO announced that its dried flower cannabis products are now available to Ontario consumers after finalizing terms with the Ontario Cannabis Store. HEXO now adds 9 of its dried flower offerings in both 3.5 gram and 15 gram SKUs to the OCS. Valens GrowWorks has been added to the cannabis ETF trading on the NYSE under the ticker THCX. THCX tracks the Innovation Labs Cannabis Index, which is a modified market capitalization weighted index with a portfolio of 36 stocks that are expected to benefit from the growth of legal marijuana, CBD, and hemp industries. Oxley Cannabis Group announced that its joint venture partner, Sunnins Farms, has entered into a term sheet for a syndicated credit facility to receive debt financing in the aggregate amount of approximately $84 million with the Bank of Montreal. The syndicated senior debt facility will be for $71.5 million for the 3-year term together with a BMO $12.5 million leasing facility. BevCanna Enterprises announces that their proprietary powder ingredient, Deeper Green, has successfully completed independent laboratory testing. Tests have confirmed that Deeper Green and products infused with Deeper Green will easily pass the cannabis compliance regulations set in California and will allow for reliable water-soluble infusion manufacturing processes and dosing confidence for consumers. Biome Grow has been licensed for the retail sale of cannabis in the province of Manitoba. With this announcement, Biome is licensed to distribute cannabis in 5 provinces: Newfoundland, Labrador, Nova Scotia, Saskatchewan, New Brunswick, and now Manitoba. Today was a big financial reporting day in the cannabis space, and we're going to go through largely Q2 revenues, unless otherwise noted. To start, Charlotte's Web Q2 revenue was $25 million US. Net income was $2.2 million or 2 cents a share. Cash and cash equivalents at the end of Q2 were $51.4 million USD. Flower One Q2 revenue was $636,000 US. Net income was $19.1 million USD or 10 cents a share fully diluted. Net income was positively impacted by an unrealized fair value adjustment on growth of biological assets of $37.2 million. Cash at the end of the quarter was $600,000 USD. Aleafia Health Q2 net revenue was $3.8 million. Net loss was $11.5 million or 4 cents a share. Cash and cash equivalents at the end of Q2 were $57.9 million. The Green Organic Dutchman Holdings Q2 revenue was $2.9 million. Net losses was $16.6 million or 6 cents a share. Cash and restricted cash at the end of Q2 were $122.7 million. Zenimus Global Q2 net revenue was $25 million. Net loss was $18.5 million or 9 cents a share. Cash and cash equivalents at the end of Q2 were $8.7 million. Sundial Growers Q2 net revenue was $19.3 million. Net loss was $12.4 million or 16 cents a share. Tilray Inc. Q2 revenue was $45.9 million US. Net loss was $35.1 million US or 36 cents a share. Cash and cash equivalents at the end of Q2 were $184.5 million. Acreage Holdings Q2 revenue was $17.7 million US. Adjusted net loss was $17.1 million US or 36 cents a share. Neptune Wellness Q1 revenue was $4.4 million. Net loss was $6.5 million or 7 cents a share. Cash and cash equivalents were $5.4 million as of June 30th, 2019. That's your news for today, folks. And if you want to get more, head over to MidasLetter.com and click on the Cannabis Daily.
Hey and a ho and a ding dang do, what a bunch of news that is. Now, let's take a quick look, shall we, at the price of gold, Edward.
All right.
And the gold ETFs, because we're going to talk in a few minutes to Dr. Marc Faber, the publisher of the Boom, Doom, and Gloom, Doom, and Boom report. Probably one of the oldest, back when Nouriel Roubini was attributed the credit for calling the financial crisis, Marc Faber had been agitating, warning about that for probably 10 years at that point, saying that this is where this is going. So when mainstream media hands out credit to one of their own for, calling something, you might want to look a little bit further back than that and see who was really calling the shots. I remember that I started agreeing with them several years before Nouriel Roubini, just because I was learning from Marc. I was like, he was educating me. He didn't even know me, but he was educating me because I was reading everything he had. And he was right. And so, anyways, there you go. But, show me a gold chart, Edward.
Well, here we got a 3 month of the gold ETF. And again, forget about the number, but this tracks bullion almost identically. Identically? Jesus.
Identically. Closely.
And look, we've had a bit of a breakout move here. Oh, look. Yeah, there we go. There, that gap's and trending higher, and here we are, almost another gap, and here we are. But I got to say, for gold seems to be acting like it's getting it. Maybe we're going to have a little bit of pullback. I hate to say it, because I'm always looking for something to act a little differently than what everybody thinks is going to happen.
Yes.
But if it has a pullback, it won't be a big pullback, because I think the die is cast now.
Yes.
Where we're starting to see people are looking at fiat currencies as anathema.
Okay.
So gold's in play. Gold's up 1% today. Silver's up 1.3%.
Wow.
As we talked yesterday.
Yeah.
If gold goes, silver is the cheaper play.
So, and silver tends to outperform gold.
That's what we're getting at here, yeah.
So, and interestingly, silver is something that anybody can afford to buy. It's not like gold. You got to lay out. Well, today you got to lay out $1,500 to own an ounce of gold.
About 2,000 Canadian.
2,000 Canadian.
Yeah.
You to acquire an ounce of silver only going to cost you 17
And if
bucks.
you look in your old containers of coins, you might find some silver coins in there.
I have some silver dollars.
I found one the other day, and I took that baby out and put it to the side because I think that baby's worth about $1.
$1?
That quarter's worth $1.
The quarter's worth $1. I think the dollar's worth 100. No.
Silver? No.
17, because it's 1 ounce of silver. It says right on it.
Okay, 17. So
One
there you go.
troy
So
ounce of silver.
17. Okay, so I was 17 times a quarter. $4. That silver quarter is worth $4 now.
The silver quarter's worth $4.
Maybe.
Oh, well, that's good. That's a hell of a deal.
I don't know. You know what? All we know is something's wrong. Other things to think about. The 30-year bond in the U.S. has never been lower.
The 30-year bond in the U.S. has never been lower.
In terms of
In the
yield.
history.
In the history. This is
So
the lowest
cost
yield.
of money is crumbling.
Well, it's got to fall.
Price of money is deteriorating.
Look at $15-16 trillion now is all yielding negative rates in Europe.
17 trillion, I read.
Is it up to 17?
17 trillion.
Yeah.
Actually, I can pull up a chart of that. I'm going to show you this. This is interesting because it looks to me like there was an experiment conducted, and the experiment resulted in the result that was desired, and they said, okay, this seems to work. We can sell this thing. Let's pull the trigger and do that. Let's see, where the hell is it? Midas Letter Daily.
Here's a question for you. So today, the 10-year rate is lower than the 2-year rate in the U.S.
Okay.
When was the last time that happened? And it's not that long ago, but I want to point out.
2010.
No, it was like 2006.
Really?
In 2006, it started to predict what was coming.
No kidding.
So you had to, the markets keep going, but the facts are saying, hey, what are you looking at here?
Yeah.
What's going on?
And what was going on?
Well, the world was about to have an extremely big financial correction because of the housing and all that. That was 10 years ago, 11 years ago. And here we are. Could be worse this time, right?
Yeah, okay. So here's the chart of the total negative yielding debt in the world since 2000 and look at this. The end of middle of 2012 was when we first saw it was Japan, I believe, and Switzerland experimented with negative yield. And so recall, this was when the government first announced the end of quantitative easing in the United States. And then the market swooned and they pulled the rug out from under that. And so fast forward, they stopped quantitative easing throughout 2014-15 in the US, and it switched over to Europe, who has now printed 2.7 trillion euros in quantitative easing and has just committed to stepping that up. So is there any relationship between a negative interest rate? So now we have $17 trillion in total debt. Total world debt is $220 million. That's including corporate debt. Corporate debt levels are at their all-time high. Government debt is totaling around $67 trillion, and 17 trillion of that is negative paying. So roughly, call it 22%, 20%.
I think the percentage is higher because I don't know I think they're only talking about central bank debt, right? Yeah. Yeah. I think it's like 15 trillion or 17 of about 30. I think it's like
No, the total central bank debt is 62 trillion. I was studying this all week long.
Okay. Listen, all I know is that number is going to keep escalating as rates keep going negative.
Yeah, exactly.
And so yeah.
Here's a guy who knows a thing or two about negative interest rates and government debt. This is Dr. Marc Faber, the author of the Gloom, Doom, and Boom report.
I love it.
Dr. Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, joins me now from Chiang Mai, Thailand. Dr. Faber, how are you, sir?
Very well, thank you, and I hope the same for you.
Yes, very well as well. Thanks. Dr. Faber, let's dive right into this era that we're now firmly deep in. One might say knee deep or waist deep in the creative policy of financial elites globally that has resulted in negative interest rate environment A thing I'm sure you never thought you'd see, and something I'm surprised is actually passing as legitimate in the global perception. But where are we at in the de-evolution of the fiat currencies currently that are so bloated by debt that they are paying negative interest? And what does that mean for precious metals?
Well, let's put it this way. I'm just writing a report because I have this monthly report about what I really never expected in my life, neither when I was growing up, nor as when I was starting to work and studying. And negative interest rates, I had read about them in the economic literature. And even at school, we discussed a character called Silvio Gesell, because my teacher thought he was a nutcase, and he was a socialist, communist, who had lived for a while in Switzerland. But that I would see in practice less than zero interest rates, in other words, negative interest rates, this is something I really never expected in my life.
Yeah, exactly. And so how does the justification, how does the logic work for you?
Well, the logic is goes like this. Basically, the central bank says, if we have say a depression like in the 30s where the price level dropped by 30%, then we should have interest rates that are also like minus 25% in order to cushion the negative impact of the recession. But to that I respond, the problem of a depression is that it was caused by a previous boom that the central banks or the monetary authorities should have addressed. And actually, if a boom or a speculative bubble bursts, it is useful to let it burst because it cleans out the system. And post 2009, this was never done. So we have zombie banks, we have zombie characters at central banks, we have zombie central banks, we have zombie governments, we have zombie countries. Everything has been artificially popped up through very low interest rates or zero interest rates as we had in the US, and negative interest rates as we had in Japan and in Europe. But as you can see, in Europe, the banks are essentially, they're going to go essentially bankrupt. And I think they will be taken over by the government. You understand, this negative interest rate policy is basically a tool to bring socialism about. This is what it is.
Wow. That's astounding. So correct me if I'm wrong. This means that when I go to the bank machine, if we were going to play on an even and fair playing field and I want to take out $100, it should give me $102.
Well, yes, correct. If you inject $100, you will only get, if you're lucky, 99. If you have bad luck and some academics have their way, the zombie academics that write papers at Harvard and books and are consultants to the Fed, you'll only get 90.
Wow, this is crazy. So
this is crazy.
This is why I actually started buying physical gold back in September, and for the first time in my life, I feel like I've done something smart with my money.
Yeah, that's wonderful. But you should have bought gold all your life. I buy every month for the last 40 years.
Wow.
So I think it's not 100% foolproof investment, because the academics at central banks and in governments and the socialists that come along, they may take it away one day from you. So you better hide it safely.
Well, that's interesting. You know, the conversation surrounding gold in times of, global geopolitical unrest has always interested me, because on the one hand, yes, if you have bought gold your whole life and you have successfully hidden it from the government, there will be a long lineup of people looking for you. to take your gold off of you. So on the one hand, it makes you quite the target. On the other hand, you won't starve like anybody else, at least not until somebody takes it off of you. So all that aside, I'm doing the math on the total inventory of fiat liquidity in the world, and I'm including debt and currency that has been derived from what I consider a 10x of the debt. And to me, that suggests that a potential, if I was to have to replace that fiat liquidity and represent it in gold, I would need a gold price of $53,000 an ounce to start. And I haven't even included the delinquent obligations of the U.S. Social Security system. So we're looking at 1,500 gold today and higher. Where does this sudden emergence of this, what I view as a crisis as yet unidentified, where does this take the gold price in the near term?
Well, basically, I've written about this also. I said, if in March, Bitcoins could reach a low of $3,200, and within 2 months they went to over 12,000, I mean, gold could easily go up 30-40% from the recent low. And my sense is that the trend will be up, and let me explain you why. Most institutions are run by zombies as well. These are people, they look at the index, and they have to weight their portfolios according to the index, otherwise the trustees give them a hard time and so forth. These people have hardly any gold. Now, the trustees, who are also zombies, they will one day ask these people, why don't you own some gold and silver and platinum? Because they are going up and everything else is going down. So then the trustees, in their ultimate wisdom, after gold has risen already substantially, they'll say, well, you better invest of your endowment fund or pension fund, maybe 3%, maybe 5%, maybe 8% or 10% in gold. And as you correctly pointed out, if you actually add up all these components of money in the world, then you come to a very high gold price. But I personally, I would be worried if the gold price goes up too much, because then the socialists and the central banks will make the case that these are unusual times. We have to take the gold away. That is what I fear the most. As long as it doesn't go up too much, we're probably safe. Okay. But if we really go up ballistically and other assets go down, then we might have a problem.
Okay, so how does the individual protect themselves against such a scenario? What other asset class is there?
Well, he can buy gold shares. He can buy, probably silver is safer than gold, or probably platinum is safer than gold. And as you know, a lot of people, especially, I always say you have to look at what the Jewish community does. The Jewish community has bought a lot of art. Right. Because it's very seldom that art is expropriated. It was expropriated and stolen during World War II by the Germans, but otherwise, it's very unusual that someone would come into your apartment and say, oh, there's a Picasso there, I take it. Yeah. But gold is an asset that has kind of a monetary value, and knowing the level, or I should say low level of intelligence of central bankers, I would not rule out that they will take it away from you.
That's fascinating. Dr. Faber, we're going to leave it there for now, but I'm going to come back to you regularly now that we're back into the gold bull market. Thank you very much for joining me today.
Yes, I hope we're in the bull market. Thank you very much.
Okay, bye now. Yeah, Dr. Marc Faber, one of the icons of the real money crowd, and hasn't slowed down a bit in 50, 60 years, I think.
What really upsets or makes me cynical is that, like he points out, that if it gets too good, and if you happen to be right, they'll just expropriate or
when the subterfuge methods of wealth transfer fail to work, they just overtly take it from you.
yeah, and that's it's a rigged game. It's all bullshit. It's such bullshit. It's like when the Pope said he gave shit to Donald Trump to put up a wall, but there's a wall around the Vatican.
Well, that's the smallest country on earth. You'd have to have a
Yeah,
wall.
they don't pay any tax.
Well, that's because the
God-
country
God
is the
want
capital
that.
city, and all of the
God is tax exempt.
God is tax-free.
Yeah.
Wow. I think I'll become
You know what
religious.
Voltaire said? When it comes to money, there is no religion.
Oh, that's clever.
I think that makes sense.
That makes sense to me. Yeah, well, anyway, so yesterday there were 9 companies that released earnings, and I thought that we would take a quick look at those because they are very telling and suggestive of why the sell-off in the cannabis space today is so great. So we'll look at how the cannabis stocks are performing first.
Tilray, we're going to look at Tilray?
We're gonna look at everything, but first we're gonna look at the earnings, and then we're gonna look at see how each stock has
Okay,
performed.
so just give me a little heads up so I can be ready here.
Okay, so let's start with Tilray. Q2 earnings revenue reported was 45.9 million USD, net loss of 35.1 million or 36 cents a share. Cash and cash equivalents at the end of Q2 were 184.5 million. So now bear in mind that they raised 450 million. When was that? Not so long ago, less than a year ago, I think. They raised 450 million in a debenture, and they are halfway through that and then some.
And I'm sure they're taking out a good salary at the same time.
Well, so they're burning through, if they lose $35 million a quarter, and you offset that against 45.9 million in revenue, we don't have a net number on that, but you get the idea. Tilray is not looking like a long-term viable business, and we haven't had CEO Brendan Kennedy in here to tell us why this numbers look so good. We're going to try to get him and see. Acreage Holdings, Q2 2019 revenue was 17.7 million, with an adjusted net loss of 17.1 million or 36 cents a share. Now, as soon as you see that adjusted net loss, that means the actual GAAP or IFRS compliant net loss was actually much higher. So when companies deploy adjusted non-IFRS, non-GAAP financials reporting standards in their financials, they're trying to hide something. And they're not doing a very good job at it because the word adjusted is your first clue. Anyways, but at the end of Q2, they only had $600,000.
Come on.
Yeah, 600K. Yep. Mind you,
They should raise some money.
well, that's just before they did the deal with Canopy. Canopy rode in with a quick and dirty private placement to cash them up, and now they're okay. We don't know what the number is because we haven't seen the financials. But let's just say that Canopy is going to be obliged to sort of look after Acreage until federal deprohibition triggers the full takeover of Acreage, assuming they still want to do that by the time that happens. Flower One Corporation. Now, this is Q2 2019 financials. Revenue was $636,000.
How much?
$636,000.
By the way, some of that revenue is
Oh yeah, you're patronizing them?
I purchased
This
some of
is
their
Flower
product.
One, not Flower Corp.
Oh,
Right, not the ones with the storefronts here. Delete that.
Delete.
So they made $636,000 in Q2 revenue, and their net income was $19.1 million.
Loss?
No. Win.
Oh, because the special items.
No. Biological assets. Biological assets. So this is where, just for clarity's sake, so those who don't know, when you see something, a line item, biological assets, this is the company valuing clones, junior plants, mid-tier plants, plants that have been stored, plant seeds. All these things are valued at the price they would fetch if they were sold today, harvested as a dried product in the store. So the chance of that happening is almost nothing. So so as I said in my daily letter, and I encourage you to go to our website, subscribe to the Midas Letter now, because I've started to put out the daily letter in the mornings. I'm going to try to do another one in the afternoon every day, basically looking at what's happening in the marketplace and giving you my 2 cents worth. And the reason you might want to, why would you want to do that, you might ask, is because, I don't know, we tend to be somewhat accurate in our long-term predictions, I've noticed over the last 10 years, Edward. Just blowing our own horn. I'm going to blow my own horn. Nobody else is going to blow it for me. If anybody would like to, give me my phone number. No, just kidding.
Yeah.
Anyway, so
Well,
Flower
we'll
One,
have to
Q2
call
revenue,
it
$636,000, but net income of $19.1 million.
Wow.
Thanks to the power and glory of the biological asset. Woo!
Yeah.
Don't believe the hype. Don't believe the hype.
I got a chart of flour here.
Nope, you're talking Flower One.
No.
Oh,
FONE.
okay, let's take a look at that.
6 month chart. Six-month chart.
Let's zoom into like 3 months and see what's been happening.
Well, it hasn't
Look at
not
candle.
much.
Is that
That's
today's candle on the end?
Yeah.
Okay.
So that this candle here. Now, if we get below this 230 level.
Well, which we're almost at.
We're almost at.
Which we'll be at tomorrow. Because there ain't no reason, after this list of 9 that I finished, there's going to be no reason to buy cannabis stocks.
In the past, when the sector was under some pressure, there were other sort of optimistic things happening in the world. That ain't so true anymore. So if you thought, like
Cannabis stocks don't go up when the S&P is dying.
the S&P is down 75 points, and yesterday it was up on that.
Well, the Dow is down over
Why would
almost
all of
800
a
today.
sudden did they have to cut the tariff? Oh, we're just kidding. We're not going to cut. We're not going to increase tariffs. No, just kidding.
Yeah,
just
right.
kidding.
We don't want our shoppers to
We're saved.
We don't want our shoppers to have to pay more for their gadgets at Christmas time.
No.
That's the top concern of the President of the United States. Shoppers may not be inconvenienced by higher prices at Christmas, because this has been Donald Trump's stated concern for a long time now. He's concerned about the welfare of the shopper.
There's a Donald Trump bobblehead that he wants that'll fly off the
I know,
shelf.
he's the President of the United
And
States. I see him every day on TV.
he's going to get a royalty off of that.
Okay, let's cut through the rest of these 9 companies. So the only real company in this whole list, in my view, that reported earnings, and they're actually earnings, not italicized, not in quotes, but earnings with a capital E, is Charlotte's Web, TSX listed CWeb, Q2 19 financials, US 25 million, putting them on track for a 2019 fiscal run rate exit of $100 million. Net income of $2.2 million, or 2 cents a share. Now, people look at that and say, well, big whoop. But here's the thing, there's no adjusted this and adjusted that. There's no non-IFRS or non-GAAP elements in Charlotte's Web reporting. In fact, I'm so proud of Charlotte's Web reporting that I'm going to cut straight over here to.
Well, let's look at the chart, because I got to make a point on this the Charlotte's Web.
We got to go quickly here.
All right.
Where the hell did my? Fuck this bullshit.
Charlotte Web's chart. Okay, so look, the stock opened quite a bit lower on the report. So even though that was great, but the best report we've seen, stock opened lower. Now the chart here looks like, I'm going to say, bit indecisive. I think we could fill a little bit of a gap here. But again, I don't know what we're looking for. But how's anything going to go up in a day like today?
Well, today nothing's going up.
Well,
actually,
that's not
okay,
true.
So
gold's going up.
Well, yes,
I
gold's
know.
going up. But I mean, in terms of the
I was being
stocks.
facetious. Yeah.
Okay, so let's finish the list here. Aleafia Health reported Q2 earnings of $3.8 million, net loss $11.5 million, or minus 4 cents a share. Cash at the end of the period was $57.9 million. So they still got cash to burn, and they've got that big outdoor crop coming. So let's not count Aleafia out yet of potentially being profitable this year. Zenabis Global. Q2 revenue was $25 million. Net loss was $18.5 million, or 9 cents per share. Cash and cash equivalents left at the end of the quarter were $8.7 million. Zenabis still a contender. Neptune Wellness, the giant that's been around forever, reported a paltry $4.4 million, net loss of $6.5, down 7 cents a share. Cash remaining $5.4 million. T-God, the green organic Dutchman, made a whopping $2.9 million in the quarter, but lost $16.6 million, down 6 cents a share. Sundial Growers, Q2 19 financials, $19.3 million, but a net loss of $12.4 million, or 16 cents a share. Now, Sundial Growers only came to trade on August 1st this year.
What's the ticker?
SNDL on NASDAQ. So the company just started trading, and we had a conversation with Torsten Kunzmann on his financial performance and the company, and here's that conversation. Torsten Kunzmann joins me now. He is the CEO of Sundial Growers, a NASDAQ trader under the symbol SNDL. Torsten, welcome.
Thank you.
Torsten, I can't believe it's taken us this long to acquaint ourselves with each other, considering how great your company's been doing and how highly spoken of it is in the industry. And recently you reported results which indicated great revenue. Tell me about Sundial Growers. What is the footprint all look like?
Thank you so much. Yeah, look, we've been a bit of a secret here. We've grown really quick over the last 2 years, built a fantastic consumer packaged goods team. That's been driving the progress we've been making, flying under the radar, I guess successfully under yours until now. And of course, intending to change that. I think the NASDAQ listing kind of put us on notice, and then hopefully the results today speak for themselves. I mean, with over $20 million in gross revenue, that places us among the larger players. We think ourselves as one of the tier ones. You know, we did a big acquisition in Europe, so we are now looking on the international side as well, playing in those three areas that we call heal, help, and play. Heal being medical cannabis, help, the global health and wellness CBD opportunity, and play recreational cannabis, and doing that internationally. So really excited about where the team is heading.
Wow, that's a great intro. How is it that you guys stayed so far under the radar for so long out there in Alberta? I mean, it's like you guys just came out of nowhere and really just sort of took the stage by storm.
Yeah, look, there's not a lot of coverage of private companies. And you know, you get on the radar once you go public. I think it's been a blessing that we haven't been, you know. So I think the consumer packaged goods approach of driving a profitable, sustainable growth model versus one where, you know, you're going to build a huge business and back in profitability is slightly different than what we've seen so far in cannabis. I think it differentiates Sundial. I've collected a great team, and I think now that the NASDAQ listing became more prominent and people are beginning to see our numbers, we're getting more calls, and it's been good to be able to focus on building a good, solid foundation in our business over the last 2 years.
Sure. You essentially started trading on the 1st of August this year, and to say the least, you've come to market at a time when the cannabis sector is basically under pressure as a result of the typical summer cycle of disinterest that sets in. How do you sort of envision that? How do you reconcile that with where you're going? And what is it that's going to drive interest in Sundial Growers going the other way?
That's a fair summary. I think the volatility in the industry has obviously been pretty pronounced, maybe even more so over the summer. Things like CanTrust certainly didn't help. But, you know, ultimately, I think the longer-term approach of building a business that our grandchildren hopefully could be proud of one day, and doing it one step at a time, one province at a time, one brand at a time, one product at a time, and then replicating that with the CBD approach that we're going to take with our products across Europe is going to set us aside. Look, proactively, you know, our first day of trading wasn't what we had hoped and looked forward to, you know. So we obviously IPO at $13, and that first day had some very strange trading dynamics in an overall volatile industry and an overall volatile market. But I'm really proud of how we've bounced back and see that today we're doing pretty good here, trading a little bit against the trend, and hopefully our Q2 results help.
Yeah. Starting off with Q2 net revenue of $19.3 million. I'm curious as to what is the source of your revenue in order of sort of priority?
I think maybe most importantly, it's all cannabis, you know. So as I look at some of the other P&L, sometimes you wonder, you know, how much of that is cannabis and how much of it is other stuff. So look, it's all cannabis revenue. As we're building our operation here, we've got a flagship facility in Olds, Alberta, where we're now cultivating for sale in 74 grow rooms already. And I think that revenue is really healthy. You know, when you come online with a new facility, some people say it takes 3 years to really dial in your rooms. Our modular proprietary grow rooms that we've built that are all identical, which are fully controlled, no glass, all elements are under control, have allowed us to learn really fast and really improve our yields pretty aggressively. But what we do in the beginning is the first rounds of products in brand new rooms are maybe not yet the quality that we want. We're focused on the super premium inhalable segment. That's where Sundial is going to play. So we've been wholesaling some of our initial product, you know, to other LPs until we have product that we really want to put our brand name on. And so it's been a combination of some LP to LP sales, so to other licensed producers, and then increasingly retail. through the provincial boards, and that's going to swing all the way to almost exclusively through the provincial boards and the retailers here as we move forward.
What is your most popular product?
At the moment, we still have limited SKUs, so we've just started shipping more under the Sundial brand. We started with a product called Zenberry in our so-called Calm product line. We've now launched 3 more in that under the Sundial brand. Excited about the next 2 brands that are going to come to market. So it's going to be Top Leaf, really the best cannabis money can buy. That's what I would call that brand. And that's going to come out here in the next couple of weeks and months, and then going to scale up across Canada. We started in our home province here in Alberta. We're still only in the flower format, only in 3.5 and 7 grams, right? So still a lot to do, still have spaces underneath each of the brands, a lot of geographies to expand into in Canada. So excited about the future here.
Great. Well, Torsten, we're going to leave it there for now. That's a great introduction to the company. Congratulations on your go public. I look forward to speaking to you more in the future.
Let's do that. Thank you so much for your time.
Thank you. Bye for now. Yeah, Sundial Grower is one of the ones to watch. I had a conversation with Dan McDermott from the Chart Guys on some trading tips, and here's what he had to say. Charting Dan McDermott from the chartguys.com joins me again. Dan, how's it going?
Great, glad to be back.
You bet. Dan, we have a lot to talk about today. Let's start with how yesterday the whole cannabis sector took a big bounce to the upside on, I don't know what. Do you have any idea what caused that?
In my opinion, it's the S&P 500. It went through a short squeeze bigger than I've ever seen as far as short-term timeframes. The 5-minute timeframe exploded based on Trump-China trade deal progress and just a huge response that surprised the market. And the cannabis space slowly was a laggard move, maybe 15, 30, 45 minutes behind that, and then just kept an uptrend all day. And it was really the market saying, oh, we don't have to worry about testing the recent lows from the dump. And that transpired into some confidence in the marijuana sector.
Mm-hmm. So you managed to make money in your trading style yesterday. Tell us how you did that, and what is it that, if you envision yourself as a trader, which I certainly don't, how would you position yourself mentally as well as financially?
So one of my trading edges is oversold bounces, and that's one of the more difficult styles. And for newer traders, it's a way to lose money. But being 9 years into the game, it's very clear to me that this style works well for me, and I trade it really well. And even just before we came on here today, I flipped the S&P 500, which is down 2.5% today, but I got a half-day maker of a trade just by a quick little oversold bounce. So yesterday, it was Curaleaf, and it was knowing that we were overextended with multiple days of downside action. I used the RSI, which is an indicator that shows relative strength. It's the relative strength index, and it shows when things are overextended. And yesterday for Curaleaf, we had a gap down open. And a general rule of thumb is with gap down opens, keep an eye out for a buying scenario. Obviously, it depends on the details, but as a general rule of thumb, that's something that I look for. So was able to get into the US ticker CURLF at 650, and then very comfortable through the rest of the day, just locking in a little bit of profit and managing the position from there.
Sure. Okay, well, that's not something that the average bear can do unless they're plugged into the machine of the market on a full-time basis. I want to talk to you about the earnings that were reported, or rather, earnings becomes a bit of a inaccurate term in terms of most companies. Tilray reported earnings of, or rather revenue of $45.9 million, but a loss of $35.1 million, or 36 cents a share. Acreage Holdings reported a $17.7 million quarter, upon which they lost $17.1 million, or 36 cents a share. And most notably, in Acreage's case, they only had $600,000 in cash left at the last quarter. Yeah, that's scary. Flower One, this is interesting to me. Q2 revenue was $636,000, but net income was $19.1 million, or 10 cents a share, based on biological assets of $37.2 million. So so all these companies have this, negative bias, except, Charlotte's Web reported positive earnings of 2 cents a share on quarterly revenue of $25 million, which puts them on solid exit run rate of $100 million. So this earnings picture is, to me, very emblematic of the entire cannabis industry. 1 out of 10 companies reports actual earnings. That's real profit, not based on biological assets. So what is the long-term prognosis of the sector as a whole for you based on this earnings scenario, Dan?
It's really just a transition from forward-looking euphoria and everybody getting in, thinking it's the next big thing and looking 5 years out, and then just reality. And this is the reality setting in. And yeah, it's going to take a whole lot of time. A bunch of these companies are not going to make it and are not going to be on the forefront. And I'm looking for the same thing to happen in the USMJ space. When we get some kind of federal catalyst, we're going to enter euphoria mode, and market cap and forward earnings aren't going to matter. And then that will pop to a certain degree. The euphoria will run out. The earnings will start coming out, and then we'll drop back to reality. And that's usually the way it goes in euphoria markets. And it seems like that's where we stand on the marijuana sector.
Yeah, you bet. Dan, just as an aside before we jump to the charts here, how does somebody sign up for your programs? Because tracking your comments relative to actual performance, I've noticed that I could make money if I did what you did. So tell me, how do I become a sort of student of what you do?
Sure. Well, we got plenty of free content on our YouTube chart or YouTube website, the Chart Guys, and that's just, to introduce yourself to it, see if it's something you're interested in. I don't like being a salesman. I've never done, a really good job of doing that. So we have the website, chartguys.com, and if you're interested in checking it out, we got the chat room community, and I do daily live streams a couple times a day, and it's really great. The biggest part of our community is the members and the amount of knowledge that is just put into this space. I learned so much from them as well, and I've never encountered a group of people like this. So I'd say that's the biggest benefit, not just me and the live analysis and all that stuff, but learning from a group where everybody has the same goal is something special.
Wow, you bet. I'm going to sign up. Not that I have too much time for learning beyond what I learned from everybody like you today, but it's really interesting. All right, Dan, let's go look at some charts now, and you can tell me what's what in the marketplace.
Sounds good.
So to start it off, we'll just exemplify what's going on in the S&P 500 because it was a red open yesterday with a rocket ship to plus 2%, and then today falling off a cliff and giving it all back and then some. So that's really just spiking the fear in the market overall, as really it was a sigh of relief for the bulls yesterday, and that has been wiped out. And there's no real reason, and this is what I find in markets as a whole, where the herd is looking for reasons that things are happening. Why are we going up? Why are we going down? Technical analysts, they just know that's the way markets work. They go up and down. There doesn't always have to be a reason. Sometimes the reasons are fundamental. Sometimes they're technical. But in this instance, fear can be magnified if there isn't a reason. So we went up yesterday, the reason being there was some progress made in the US-China deals. Some tariffs were delayed, and they were talking about, talks over the phone in a couple weeks, things like that. And giving that all back without any significant change in the narrative from yesterday spikes that fear, as it's an unknown. What's going on? Why is this happening? So complete 180 turnaround. Here it is on the daily time frame. Big green day, breaking to the top of the bounce and giving it all back and heading to the low of the dump. And if we're looking at HMMJ, just using this as an example for a broader perspective on the sector, completely opposite days, a 180 turnaround. And it's, you have to say that there's absolutely correlation to what the S&P 500 is doing. A lot of people struggle with correlations because they are constantly changing. The only reason I keep a fairly firm grip on correlations is because I'm staring at the screen for hours on end a day. That's my job. That's what I do. So I'm always watching these little intricate links on the 5-minute time frame of correlations picking up, and then they fade, and they come and go all the time. In this instance, the S&P 500 had a significant impact on the euphoria yesterday, and now the fear, and here we go again in the sector today. So I want to touch a little bit on APHA, just as an example of what I was talking about, James, because the last time I talked to you, I was talking about the bullish earnings reaction, but the need for follow-through and a daily trend change. The gap up was great. The little push after that was great, but we gave so much of that back, and now we're in that pattern again of lower highs and lower lows. So we came from multiple months where every single bounce was a lower high and every single pullback dropped to a lower low. And here we are doing it again, just from a different starting point. Earnings gave the gap up, but it's still just a lower high and lower low pattern at this point. The bulls never changed the daily trend. That doesn't keep any pressure on bears to continue covering. It allows bears to enter positions and stay comfortable, and it keeps all of the pressure on bulls as support levels and recent lows continue to get taken out. So the bulls had one requirement to shift that momentum, and they were unable to follow through with it. Every earnings, we had the first wave of earnings, we had Village Farms, APHA, and all of those names, the initial reaction was bullish, and we would gap up, and then we would see profit taking after that. And just pulling up VFF real quick, we can see again, big gap up earning yesterday, all profit taking yesterday into today. Now, into today, we have the TLRY earnings, TGOD earnings, CWeb. TLRY was down 15% initially to start the morning, and even CWeb, who reported a profit, I believe, I haven't read those earnings, but I believe they reported a profit, they were down 15% as well. So huge pullbacks because of the negative reaction to earnings being magnified by the bearish action in the S&P 500, and now all eyes are on CGC, which of course is the sector leader. And CGC, if we have a bearish reaction, we're going to drop down to the lowest prices that we've seen since pre-Constellation deal. And that's going to drop us down to the price of January 2019, and we'll be watching some psychological levels, $30 psychological, but the bottom line is CGC has not changed the daily trend ever since we started pulling back from $52, which was the local top up at the end of April. So it's been a very notable downtrend in the sector with just the inability to change daily trends. Some of the USMJ names have changed the daily trend. A couple of the stronger Canadian MJ names like VFF were able to change the daily trend, but as a whole, we're really just not seeing any significant follow through that gives bulls comfort that the bottom has been set. We've seen some shifts in the last 2 weeks that can have us say, okay, we're getting a little bit closer. Bulls still have to do X, Y, and Z, and we're watching for it. As we know, seasonality favors the bulls in the fall and the winter, but we're still not there yet. If CGC can have a bullish reaction to earnings, that will obviously help. But honestly, my focus at this point is on the S&P 500 and watching the 281.72 low from the dump, because if that level breaks, there's a lack of support nearby, and then you're just going to get CNBC spinning the recession narrative, talking about inverted yield curves, all of that stuff. And, just yesterday, that was on the back burner, but as soon as you see weakness, that's back in the forefront, and that's where we stand right now. So fear is picking back up in the market, absolutely. And that will trickle down into the MJ sector, in my opinion, especially if the S&P 500 breaks its recent low. So a lot to be watching, a lot going on, bigger picture. Again, I used to talk about how when talking about the marijuana sector and Canadians, how they now have to be aware of what Trump is tweeting because it's affecting the overall market, and the overall market is affecting the MJ sector, and it's all interconnected, and it's always entertaining. So we'll see what next week brings, but most importantly, let's see how CGC does after hours.
All right, Dan, awesome input as per usual. Thanks for joining me again.
See you next time.
Always a fountain of wisdom, our friend Dan McDermott.
You know what? The guy seems very, very committed. He seems on the ball, and I know what he's talking about. I can't articulate it as well as he can, but if that dump that he talked about, that low, if that gets breached, then it's going to cascade lower substantially. It's not going to just, we're going to go down by a little bit. So you know what? Maybe the low that we hit back in, looks like around the middle sometime between May and July. Looks like May, June, July. Yeah, June.
Cool.
So
looking at the indexes now, they've given back, and we're talking the cannabis industry here. The Midas Letter Canadian Cannabis Industry, this is a large cap index of all the Canadian listed large cap companies trading over 500 million, gave back everything it gained yesterday. If you recall, yesterday it closed at 4.9 up, and today it's down 6.05, demonstrating in no uncertain terms that yesterday's sudden reversal was in fact a dead cat bounce catalyzed by false triggers in the S&P 500. The small cap cannabis index, Midas Letter small cap, is down 4.18. The Midas Letter Venture Index is down 3.79. And the Midas Letter Canadian CSE Cannabis Index is down 3.52. So there's very little reason to be optimistic about cannabis in the immediate term. But let's not forget that there is that giant catalyst in the sky hovering around out there somewhere. And the closer we get to Election Day next year, the sooner that's going to happen. That's going to be where that some political element in the United States causes cannabis to be deprohibited on a federal basis, likely going to happen by executive order by Donald Trump when he realizes that he's going to have to come up with some desperate way to pull the tension off the fact that he has single-handedly destroyed the U.S. economy. Or, did I say that? Gosh, I must not be a Trump supporter.
You know what? This whole thing started when they started printing money recklessly, and it goes back.
Yeah, and actually the president, he's just the unfortunate... Oh, I thought we were... Okay.
Okay.
We're back!
And yes, and it's already tomorrow.
And today, welcome to another show. We're going to go 24 hours a day now, as long as there's a financial crisis unfolding. Wait, no, we'll come back tomorrow and start that then. I guess that's our show for today. Don't forget to hit that subscribe button if you're watching on YouTube.
Not the one that you used to.
And if you want to get our newsletter, I'm going to be publishing every morning by about 10 a.m., giving you a heads up on what's happening, not just in the cannabis space, but in the unfolding financial crisis that has now begun, and how to protect yourself. So subscribe at MidasLetter.com, and we'll see you tomorrow. Thanks for joining us.